Welcome to Real Estate Radio, hosted by the real estate therapist, Larry Shakman, a top-producing real estate broker, author, CEO, and founder of TrustedAgentUSA.com, the ultimate real estate matchmaker, connecting you with top-performing agents for 2% commission. Each week, we bring you exclusive interviews with industry experts, covering everything from staging to negotiation strategies to home inspection issues and everything in between. Whether you're selling your home, a first-time home buyer, or a seasoned investor, we've got you covered. Let's make your real estate dreams a reality in this fast-moving and ever-changing real estate market. This program is funded in whole or in part by Trusted Agent USA, Illinois license number 475-145-795. Now, here's Larry.
Good morning, everybody, and welcome once again to Real Estate Radio, Saturday mornings, every Saturday, 9 to 10 a.m.
Every Saturday.
With my buddy Dylan Kramer.
How are you, Larry?
Doing awesome.
Awesome. Glad to see you in person.
Yep. Glad to have you back from your 2-week vacation over there on the East Coast, Cape Cod. You went to New York too, right?
There's a lot of really cool stuff on the East Coast. So we started in Niagara Falls, and then we shot across kind of Vermont, New Hampshire, stayed a couple of days in Maine, came down to Boston, Cape Cod, and home. So yeah, really hit a lot of stuff out there.
Awesome.
And I would tell you, if that's a place in the country that you thought about going and you haven't been, it's well worth doing. I know you've spent some time up that way.
Yeah, I actually lived in North Weymouth, which is not far from Boston, and it's a great area. It's very similar to Chicago in a lot of ways. You know, very blue collar, but very cosmopolitan. And nice place.
I may have mentioned this. Look, the reality is we're very proud to be from Chicago. I know I am. But I get the feeling that nobody's prouder to be from where they are than people from Boston.
Boston, yeah. I was Larry, to everybody in Boston. I was Larry. Larry, where are you going? Larry, come here. Wicked. No. So anyway, everybody, welcome to Real Estate Radio. Again, we're going to be talking all things real estate here. We have a lot to cover. Before we jump into it, I just want to let everybody know we want to hear from you. Give us a call at 773-763-9278. And you can text us at that number as well, 773-763-9278. You can also see us live if you think you really want to do that.
Be careful with that.
It's early. You could see us live on Facebook at WCPT 820, and we're also live on YouTube at Larry Shakman. So at my name, at LarryShakman, at Larry Shakman on YouTube, and the Real Estate Therapist _ on TikTok. So you guys tune in, call in, and before we go any further, I just want to thank our segment sponsors. Of course, Benchmark Mortgage, Dylan, At Home Title Services. If you're a licensed real estate agent in Illinois, you need to become a registered title agent. You will thank me later. Go to TrustedAgentUSA.com, click on our partners, and click on At Home Title Services banner, and check them out. This is something you really need to look into. And finally, TrustedAgentUSA.com. You can save tons of money buying, selling, or investing, so go there and check it out. And having said all that, Dylan, we have a lot to talk about today.
Larry, we got a boatload of stuff. It's funny, we did a pre-show yesterday on YouTube, and I made some notes from it. And I've got 3 big topics, and I'm not even sure that covers everything we've talked about. It's been a really, really busy week. I know we talk about this kind of every week, that we've got an ever-changing market, but things are really shifting right now, and it's a really interesting and I think good time to be engaged in the market.
Yeah, I think, there's a lot going out there. We got a lot to talk about with rates. You have a great story in terms of how you can kind of attack this situation if you're looking to sell and move up, but you're at a 3 or 4% interest rate, and you're looking at probably getting into a 7%, if you're lucky, interest rate.
You want to jump in and talk about that? I think
we should
talk about rates to this week first, and then transition into how to fight that fight, because we've really have had some things over the last couple of years that I think have been kind of attempting to fight the fight, but I think we have something real now. Yeah. So let's talk about rates.
Yeah, I mean, rates are obviously always on everybody's mind, and, you know, rates affect a lot of things, right?
For sure.
Because as the home builders have been kind of filling in that gap of sellers staying on the sidelines, because they don't want to move out of that rate that they have. So home builders have been kind of filling that gap a little bit, right?
Home builders are killing it. But I read an article this week, Larry, and I think that it's worth talking about. One of the things that home builders have discovered, and you know, I saw this piece on CNBC and went to the article, so it's not my idea, right? Mm-hmm. I'm going to say that right off the bat. The thing that home builders are doing, in addition to providing inventory for people who want houses, so it's a great time to be a home builder, which you wouldn't think in a rising rate environment, but it absolutely is. The thing that they're doing is they're building into the cost of lots of these properties the cost of getting the mortgage to 6% or under. Mm-hmm. And it's expensive. Mm-hmm. I mean, at the end of the day, if you're in a 7.5% market and you've got a $450,000 house, for you to move a $400,000 mortgage, let's say roughly 10% down, right? If you're going to move that down to 6% from 7.5%, it's going to cost you 8, 9, 10 points. It might cost in the secondary market. Now, you might be able to do some of that in bulk and reduce it a little. But even if it's 5 points on a $400,000 loan, it's $20,000.
Yeah.
Now, don't get me wrong. They're building that into the cost of the house. The consumer's paying for it.
Of course.
But the reality is that they're selling houses largely because they're able to turn to consumers and say, we can get you 6% on your financing. And the thing is that although it's built into the cost of the house, that $20,000 is way less expensive than financing at 7.5
over 30 years
if you build it into the cost of the property, right? So it's kind of a winning strategy that the builders have in the marketplace for new construction. If you can wait 6 or 8 months for the house, if you can turn around and afford whatever that price is, like there's a lot of ifs there. But the thing that I think has really been key is, because we've talked about this before too, 6% spurs people to action.
Yes.
The problem we've talked about is if you're waiting to buy a house in a neighborhood that exists currently because that's the right schools, because that's the right place for your family, you're like, well, I'll wait till rates will get to the 6. You know what else is happening? Everybody else is waiting for rates to get to the 6s.
And when that happens, it's going to explode.
Exactly.
You know, the thing about builders, too, though, with these rates going up for the first time in about 7 months, builder sentiment has actually dampened a little bit because of the rise in rates. Now, housing starts have gone up, and, you know, they're still feeling pretty good, but sentiment has gone down for the first time in 7 months with builders because of, and I don't want this all to be doom and gloom. It's not. The market is cyclical. I don't care what market you're in, real estate, the stock market, whatever it is, it's cyclical.
True.
It's going to come back down again.
Well, and I think the builders are also fighting the fight of, and we saw this a couple years ago when lumber prices exploded, right? There's still inflation all over the economy, and if you're building, how many materials do you need? You probably need 100,000 individual items, right? By the time you buy nuts and bolts and screws and lumber and appliances and et cetera, et cetera. Like none of that stuff's cheap, and you can get bitten at any point in time. It's a good time for them. In terms of people coming in the door. But as lots of businesses will tell you, you can serve a lot of customers and not necessarily make money. So we'll see how it all turns out.
You know, what's crazy is although rates are going up, consumer spending hit its highest gains in 6 months. Now, credit card balances are going up too.
That's really it. Credit card balances are through the roof.
Yes, exactly. So, I mean, a lot of this it kind of doesn't make sense, right? It's kind of all a whirling dervish of what's up?
It's challenging, Larry, because at the end of the day, if you're making a little less money or there's inflation so your money doesn't go as far, at some point, and I think that this ties back to the builder sentiment concerns, at some point, if you put it on a credit card for 2 months or 3 months and you're like, all right, we'll get it. Eventually you wake up 6 months later, you're like, wow, this balance is out of hand and I have to pull back and knock it down. As opposed to 50 years ago in a cash economy where it's like, well, I'm not making what I was, or inflation is here. I have to tighten my belt today. The credit card industry serves this gap, right? Not to pick on credit card people. They provide an opportunity for people to put themselves in a spot where they can carry short-term financing. The problem is, I think and this is the consumer sentiment thing, and that sentiment ties to builder sentiment. I think consumers are reaching the point, and I saw some articles on this week, where they're just getting tapped out. They're either running up against their max credit card limits, or they're running to the max comfort level that they have. And most people have spent their way through whatever extra cash they picked up during the pandemic. That's not a thing anymore. And so we'll see. But I mean, we're spending a lot of time talking about negative things. I think that at the end of the day, these things are absolutely in the market. But then the question becomes, well, now what happens next?
What happens next? And we're going to talk about that. Something else that it's interesting because inflation has gone from 8.3% to somewhere around 3.2% in a year, right?
Yes.
It really, a lot of the things the Fed has done in terms of incrementally raising those rates, a lot of those things have dampened the exposure we have to inflation. So we've gone from 8.3 to 3.2. We still have work to do. But in their last conversation, the Feds mentioned and kind of intimated that we probably are looking at a couple more rate increases, which for short-term loans, not great.
You're right. Look, here's the thing. The Fed wants 2% inflation. So great, we're at 3.2%. We're moving in the right direction. They'll keep increasing until we get to 2% inflation. You've heard me mention this before, that the Fed is going to get inflation under what their version of control is. And so we're going to turn around and get there. And it's just a question of when.
Hey, Dylan, we have a call from Frank, and I think he has a question on real estate classes. Let's bring Frank on. And hey, Frank, how's it going?
Oh, it's going pretty good. I'm interested in the class. Do you have a class near this area?
So where are you located, Frank?
I'm located in Homewood, Illinois.
So you're in Homewood. And you're looking for a class to get your real estate license?
Correct.
Okay. Well, I know that probably most junior colleges around you offer a class. I know now I'm in the Naperville area, but I know there's a great real estate school out of Aurora as well. I know that's a little ways away from you. But if you leave your name with our man of the hour, Devin, who runs our board and is our producer, leave your name and number with him and your email address. I'm going to get back to you, and I will give you a list of schools in your area that you can check out, because I think that's a great thing to do. What do you plan on doing with your real estate?
I was going to ask Frank. Frank, what's drawing you to real estate?
Well, I know how to rebuild a lot of homes. I'm very interested in the market. And I had taken the class before a while back, and it was too fast for me. I was doing too many things. I had too many irons in the fire, so to speak.
Gotcha. Yeah, leave your name and all your contact information with Devin, and I'm going to get back to you, and we'll get you all set up.
Okay, great.
Awesome.
Great.
Yeah.
Thank you very much.
Yeah, thanks for calling.
I have a very good plan to help the community, and I'd like to discuss it with someone at a different level, if you know what I mean. Someone that really is interested in helping the community and making money at the same time. I mean, you got to eat every day.
Yeah.
You know, the real estate therapist is definitely going to be able to get you on the couch, Frank, and help you out from there. So we look forward to talking to you down the road.
Yeah, absolutely. Leave your contact information with Devin. I'll be in touch. We'll get you all the information on the real estate schools, and I'll help you out any way I can with what your plans are moving forward.
Oh, thank you so much, and great show.
Yeah,
Thank you.
thanks, Frank. Keep tuning in, and we'll talk to you again soon. Okay, that was Frank, and yeah, there's a lot of great real estate schools around. If you're looking to get into real estate, give us a call. I'll tell you exactly where to go to do that, how to do that, and get you started off. So we were talking a little bit about rates, and you know, again, the market is the market. We're going to get to rates in a second here, but inventory is still extremely low, which means prices are not going down in the near future.
You know, we've talked week after week after week, but I think it always bears repeating that there's no place for you to go sit on the sideline and wait for lower prices. One of the issues that's the reality in the market is because more people want to hang on and should hang on to their 2 3/4, 3%, 3 1/4 mortgages. There will even be people, and this is something we'll talk about as time goes on here today, there will be people who will, you know, convert that property into a rental and not put it back on the market, even if they move. Mm-hmm. So the thing is that because that house won't come to market, it won't be part of the inventory, and it won't solve the inventory problem for the people who want to be home buyers.
Yeah. Yeah. So I think people have to be real cognizant of the fact that, and all of us, those in the industry, those out of the industry, those looking to buy and sell, and those helping others buy and sell. Again, this is cyclical. Things change. Geopolitical, you know, the world's a much smaller place now. So when these big geopolitical events happen, that can affect the housing market. And so I think we all just have to remain level-headed, take a deep breath, reach that real estate Zen moment, right? That's what we're here for. We are the real estate therapists, and the couch is open. So, yeah, we just have to keep that all in mind, that things change,
for sure.
And you got to just adjust your sails to catch the wind and do the right thing.
Absolutely.
And make the right changes. We're going to have Tom Jurek calling us in as well, somewhere around 9:30. And Tom is the owner of Chicagoland Softwash, which is a really interesting business, and he's going to tell us all about it, how you can take your curb appeal to the next level.
Yeah, I think that's going to be interesting and certainly worth sticking around for the second half of the show.
Yeah, so let's get into, we wanted to talk about rates.
Yeah.
And we wanted to talk about that the client that you've been talking to.
Yeah.
Let's get into that a little bit.
So let's talk a little bit about this. You know, one of the things that we've said week after week after week is, hey, rates are rising, and all these people with their 3.5% loans and below don't want to sell. So I got a call from a client, and we spent a lot of time engaged with him this week. And his big thing was he's moving. There's no question about it. He's a younger guy. He's about 30. He's got a young family. And so he and his wife bought their first house 3 years ago, literally 2020, right during the pandemic. Got 3.5, 3 1/4, somewhere in there.
Nice.
Their monthly payment on their house on a $210,000, $220,000 house is $1,183. I went back and did the math after we talked about it the other day on YouTube.
They bought this house in 2020 for $210,000. Where is it located?
Let's not get into that
Okay,
because
so
you know
is it
what?
a
I don't want to
single
compromise
I
the
gotcha.
client's
Is it a
integrity.
single
It is a
family?
single family home.
Okay.
So, so since then they've had a baby and they have another one on the way. So they've got a toddler, and they've got a baby on the way, and they don't have enough space.
Life moves real estate.
There's no question about it. We talk about that all the time,
Yeah.
right? And the thing is that they bought that place for $2.25. It's probably today worth $275, maybe $260, somewhere in there. So if they sold it today, and that was kind of his idea. He's like, well, we're thinking we're going to sell it, get 50 grand out of it, and then move on to the next house. And what's that going to look like? And so we did some math around that, and they're qualified, and it's no problem. I said, what are you going to have to spend to get the type of property that you're interested in? He's like, probably $3.25, right? And they're going to stay in the area they're in the suburb that they're in, but they're going to switch subdivisions, and they're going to get a bigger house and another bedroom or two and a bigger garage, an attached garage instead of a detached. Like they're in a starter home, right? Period. So the thing is that he's like, when we do the math at $7.25, $7.50, that payment's $2,500 a month. If you turn around and you just put 5% down. Now he's like, well, what if I took this $50,000 and put it down? Well, it's $2,100 a month. It's still an $800 increase. So we went through the exercise and said, and I asked him, do you have 5% to put down on the new house? He's like, I don't have 5%, I have 10%. Like, great. What if you just took 5% and then kept 5% cash in reserve for emergencies? What could you rent your existing house for? And so his answer, after talking to his real estate professional who sold him the house 3 years ago, was you could rent it all day long for $2,000. So that's going to put $800 and change in his pocket if he turns around and converts it to a rental. So now, instead of saying, hey, I'm going to sell, put $50,000 in my pocket and maybe cut the new payment by $400 a month, he's like, I'm going to rent this place out, and I'm going to make $800 a month. So he's going to do better monthly by not selling it and converting it to a rental. And the thing he said to me that really hit home, which I think is really important to consider in this current market for everybody who's got a low rate mortgage, is that if you can afford the down payment of your next house, your existing mortgage is a tremendous asset. Yeah. And you should put it to work for you. Because if you sell your house and you pay off your, in this case, $181,000 or $85,000 loan, money. It's the bank's asset. Yeah. You give them money back that they no longer have to have tied up at 2.5 or 3 or 3.25, and they will put it to work on the new mortgage at 7.5. Yeah. Or you
and they're
can
more
turn
than
around
happy to do that
and make the spread. And if you do the math, Larry, because I'm a math guy, it's what I do.
Thank you.
The thing is, the $800 a month on $180,000, it's about $9,000 a year, or about a 5 or 6% return on the money, depending on where the tax bill goes and the insurance cost shifts and et cetera, et cetera. But the thing is, that's the difference, 5% between 2.5 and 7.5.
So guys, what Dylan is saying, if you're sitting in a house and you want to move up, you want to sell your house, but you don't want to sell out of that 3% mortgage, you can rent that property.
I would even go farther, Larry. You're right about renting the property. I would say not only that it's actually a proactive move to say, how am I going to afford a 7.5% mortgage? Well, the answer is the rent spread. Rents are through the roof. Tell me.
They are through the roof. The only thing that's gone up more than housing prices are rents.
There you go.
Rents have gone up through the roof in the last few years.
Yeah, so the idea that somebody can say, hey, you know what? How am I going to, I want to move, but I feel stuck because I have a sub 3.5% mortgage. I would argue that you have to do the math in a non-traditional way. And instead of saying, wow, I'm stuck because I can't afford another $1,000 a month or $1,500 a month in payments, which is what happens if you sell your house traditionally and buy the next house. But if you convert your existing house to a rental and you make $800, $1,000, $1,500 a month over your mortgage payment, well, now you've offset that extra $1,000, $1,500, $2,500 a month in incremental cost of moving to 7.5. And now your tenant will pay a large portion of your move-up cost from a monthly cash flow basis.
Yeah, and guess what else? You're still gaining equity on that property that you're renting out.
Absolutely. Look, there are a bunch of great reasons to convert houses to rental properties, and that's one of them. But the biggest thing in looking at this with this particular client is he's like, this $800 will offset the $1,250, $1,280, whatever the exact number was for him. So now he can move his family into the bigger house, basically for $400 a month. That's workable. Moving up for $1,200, $1,300 a month might not be workable. So at the end of the day, it's finding a workable solution that is really going to be the home run for folks here. Yes, you can depreciate the property now because it's a rental property. You can gather additional equity building by that payment that the tenant provides every month. All of those things are true. But if the only thing you're trying to do is convert yourself into a different house from a cash flow basis, this is a strategy that will do that.
Yeah, so guys, keep that in mind. There are, and this is what we talked about a little bit earlier, changing your sails to catch that wind and do what you need to do for your family, because like we always say, and like we said earlier, life moves real estate. Rates don't move real estate. If you have to move, you have to move, whether that's because of a growing family, a job change, some other change in your family situation, and you have to move. There are ways to do this. They may not be traditional, but you can do it.
You're absolutely right, Larry. I'm going to share with you something. I'm going to give you the clean version rather than the more off-color version. But I had a mentor in the business who said 20 years ago, he's like, you know what? Nobody comes home, finds their spouse entangled with somebody else and says, you no good so-and-so, blah, 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 blah. We're getting divorced. Just as soon as rates go back down.
Yeah, exactly.
Right? Like
that
the world keeps moving. It's
the world
just
keeps
part
moving.
of the deal.
Yeah, you have to you have to adjust like you do with anything in life. So we're going to take a real quick break right now, guys, and we are going to come back with Tom Jurek of Chicagoland Softwash.
Tune in to Real Estate Radio Saturdays at 9 a.m. hosted by the real estate therapist Larry Shakman, a top-producing real estate broker, author, CEO, and founder of TrustedAgentUSA.com. Top-performing agents for 2% commission, saving you thousands when you sell, buy, or invest. Real Estate Radio, the ultimate real estate radio experience. Get insider tips from experts throughout the real estate industry. Streaming live on Facebook at WCPT 820. Trusted Agent USA Illinois, license number 475145795. Welcome back to Real Estate Radio, sponsored in part by TrustedAgentUSA.com, the ultimate real estate matchmaker, saving you thousands. Now back to Larry, the real estate therapist.
All right, you guys, thanks again for joining us this Saturday on Real Estate Radio with the real estate therapist. That's me, Larry Shakman. I'm also a broker for 23 years I'm with eXp Realty right now. We're going to be joined in half a second here by Tom Jurek. And before we do, I just want to thank our sponsors one more time, At Home Title Services. If you're a real estate agent in Illinois, you need to check out At Home Title Services. Go to athometitleservices.com or go to TrustedAgentUSA.com, click on our partners, click on their banner, and check out what they have to offer for you. It is really spectacular, and it's something that is going to increase the services you provide to your sellers and increase your bottom line. So two good things. Our other sponsor, of course, is Benchmark Mortgage. If you need a solid pre-approval and a great experience with that lending landscape that we're all looking at right now, you really need to call Dylan. Dylan, how do they get in touch with you?
You can call or text me anytime at 630-708-7088. One of the things before we get out of here today, Larry, is we'll want to talk about some of the saving of loans that we're doing because the company I work for doesn't have what we call overlays, which are extra requirements that other companies might lay in. We've had the opportunity over the last month to have put 5 transactions together and send them to closing that were told no by somebody else.
Yeah, so that's something to keep in mind. Just because one lender tells you they can't get this done right now for you doesn't mean another lender can't get it done.
Absolutely. So again, 630-708-7088. Call or text anytime.
Yeah, call Dylan and he will set you up and answer all your questions. Even if it's just a second opinion, give him a call. Also, I want to thank TrustedAgentUSA.com, a company near and dear to my heart. Go to TrustedAgentUSA.com and find out how you can save literally thousands and thousands of dollars buying, selling, or investing. For instance, our home buyers get up to 0.5% rebate back on the house that they're purchasing, plus a free 1-year home warranty for peace of mind. And our home sellers list their homes for as low as 2%, and if they're buying their next home with us, for 1.5%. And if we bring the buyer to the table, there is no buyer agency commission. So a lot of great things happening there. TrustedAgentUSA.com. Check it out. Now we want to bring on Tom Jurek, and Tom is with Chicagoland Softwash, and he's going to tell us about his company and exactly how his company differs from others in that industry. Tom, how you doing this morning?
Good morning, Larry and family.
How are you?
I'm doing good. How are you, sir?
We are doing great.
Fantastic.
We're joined here by Dylan Kramer, Benchmark Mortgage. So, yeah, we have a lot. I have a lot of questions for you because, first of all, you guys do phenomenal work. I've seen some of your work. I've seen some of these $1 million houses that you have, provided your service to, Chicagoland Softwash, and give our listeners a kind of a thumbnail, 10,000-foot view of what you do and why it's so valuable.
Definitely. So Chicagoland Softwash, we created it in 2016, and it was a new way. It's a new way of actually applying our softwash process instead of using high pressure from a power washer like so many companies do. So I had a paint 25 years ago, and I used to hand wash exterior homes before we painted them. And it was a process that would take forever, but it was done right. Fast forward a couple years later, we decided that something new needs to be done because, again, there's so many problems with pressure washers and people behind the pressure washers that destroy it.
Yeah.
So we eliminate the algae, mold, and mildew that's on the side of your homes, your roofs, and we kill it right at the root of the source, and then we apply a gentle rinse to eliminate all that bacteria that has just died, revealing the original substrate.
So first you apply the whatever it is you're applying. I'm not going to get technical about it because I don't know enough about it. But first you apply that, and then you soft wash it off. And it almost kind of sloughs off all of the grime and dirt and whatever else.
Most definitely. So if you see roofs with all those black streaks everywhere throughout, so we restore cedar shake, asphalt, metal roofs. We drive it, you name it, stucco. Those type of applications need the soft wash process because you can't use high pressure on any of that stuff.
So let me ask
you. So we eliminate.
Yeah, go ahead.
I'm sorry, go ahead.
No, go ahead.
No, you go. I'm sorry.
No, well, I was going to say, Dylan had a great question because he's in the same boat as I am. Like, I have a deck that needs to get done. Dylan has a deck. Do you guys do decks too and things like that? Like, if someone just says, Tom, I really, we're having a graduation party. Our house looks okay, which it probably doesn't. They probably need that soft wash too. But I really need the deck cleaned. I really need this deck looking new. Does soft wash work on a deck as well?
It works phenomenal because, we eliminate the algae, mold, and mildew right at the root of the source. And we, when we apply our chemicals, we just basically use a 70 psi rinse factor, and it eliminates it, and it cleans the substrates like decks, houses, roofs, 10 times cleaner than just giving a haircut with a pressure washer.
Yeah.
It's an amazing technique. I spent thousands of hours to actually learn it, and I've tried everything, and we've got it dialed in. And we do a lot of work for realtors, property managers, and
Absolutely.
all that. Use it because there's a need for it. And not everyone can do this because there's a science to this. So when we're looking at houses that have, like for instance, we do a lot of homes in Highland Park with stucco and drive it.
Mm-hmm.
When we look, those are things that cannot be touched with a pressure washer. It's just too much pressure.
Mm-hmm.
But once we're done the process, it comes out spectacular. So the customers don't have to paint. If someone is selling a house, they obviously, when you go buy a new car or a used car, they don't give you a dirty car; they give you a clean car.
Mm-hmm.
And that's the same thing that we use when we work with realtors or customers that are selling or customers that are buying.
Mm-hmm.
There's a majority. You just want a clean house when you move in or when you're ready to sell.
By the way, you guys, if you want to get in touch with Tom and Chicago Softwash, he's going to give all of his information out, but you could also go to trustedagentusa.com and also just click on our partners, and you're going to find Chicagoland Softwash's banner there. Just click on it. It's going to bring you right to their website. You can contact them directly. And, it's funny you mentioned that about the power wash because, when I power wash my deck, and we use, the typical power washer that everybody has, the little thing that's about 3 feet tall with the hose attached to it and whatever. That's power. It's like a fire hose on your deck. And if your deck isn't in good shape, you're bound to do more damage to it. So, a lot of value to what you're saying.
Definitely with wood and composite. We've been seeing so many people damaging composite decks with high pressure, with just even like a 3,000 psi pressure washer, and it just destroys everything.
Well, even porch furniture. Like I have some really nice furniture on my porch, and if we power wash that furniture, it's probably going to disappear in front of our eyes.
Starts to fray, yeah, for sure.
Yeah. But if we do it with your process, which I was going to ask you, is this a proprietary process? Is this something that you developed and it's proprietary, or how exactly did you come upon this?
So what this is proprietary to the fact that a lot of these companies are saying it's proprietary, but basically what we're using is we're using pull shock, and we have it throttled down, and that's the only thing that's going to kill anything on site right there. Because if you've got products like Wet and Forget that they spray on, those are some toxic chemicals that just sit on your substrates, and that's not good for dogs, not good for your kids, it's not good for family. We basically throttle our percentages down to, say, for instance, like a basic house wash. When we're using, I'll get it real quick with the mathematics. If we're using 12.5% bleach, we pour it in 12.5%. By the time we regulate it through our machines, it will come out to 1%. 1% is ideal for vinyl, concrete, decks, because it's just enough to kill the organics, but it will not destroy anything else.
Gotcha. Hey, question, because of course this is always the $64,000 question, right, Dylan?
Absolutely.
How much? What is a typical home, not necessarily a $5.5 million, 7,000 square foot home with different substrates, cedar shake roof, all that kind of stuff. But let's just say a typical bread and butter home that's in the $400,000 to $500,000 range. It used to be the $300,000 range.
Those days are long gone.
Those are gone. But in the $400,000 to $500,000 in the dollar range, what is somebody looking at to get their house cleaned with Chicagoland Softwash?
Typically, we charge around $450 to $500 to get it cleaned. That includes the gutter brightening, because you see a lot of gutters that have all that organic staining, or they call it, we call it acid stripes. They call it tiger stripes.
Mm-hmm.
So basically $400 to $500 to get your house nice and clean, and that increases the property value a lot, especially if you're trying to sell your house.
If you're thinking of selling your house, now we had Margaret Gear on a couple of weeks ago, and we were talking about home staging, and it's so important to stage your home correctly. However, curb appeal is so important, because the first thing someone sees when they drive up to your house is the exterior of your house. And using a company like Chicago Softwash, that is going to increase the value of your house and that emotional appeal to the buyer when they drive up in front of your house. I remember how it was, Dylan, when I bought my house. I drove in Naperville. I drove up, and I live in Naperville, so
yeah, we're aware.
Anyway, I drove up to my house, and I told my wife, I said, we have to come take a look at this house now. This house is going to be gone shortly.
Right.
And this was years ago. And so that emotional appeal is so important. And a service like Chicagoland Softwash just does immeasurable good when someone first looks at your
Larry,
house.
I think the other thing, and maybe Tom can speak to this a little bit, is the flip side of that is true too, right? That you can walk up to a house that hasn't been taken care of like this, and has, as Tom referred to them, the tiger stripes, or whatever other dirt is there, and you're like, oh, and
Exactly.
and it seems like, for a fairly nominal amount of money, I know when you're selling your house, you're spending money left hand over fist, right? But it seems like a pretty good investment that could turn around and either find you the right buyer, or more importantly in this market, convince people, because you got to pay full price for most houses, that it's absolutely worth paying full price for this house and doing it quickly.
Yeah, I mean, I cannot say enough how important it is. And, the other thing that's important is the first thing somebody sees after they drive up to your house and park in front of your house, before they walk in to tour it with their agent, is your front door. That's the other thing.
Tom, what has that been your experience?
Oh, most definitely. Like I'll hear from realtors, or I'll hear from customers where possible buyers, that when they look at a roof and it's extremely dirty, okay, with those stripes, they're automatically thinking that they're going to have to replace that roof, and that's not necessarily true. So basically, you just paint it, and it adds the value, because then it also helps the realtor to put more money in the pocket, because that's what everyone wants is, working hard. You want the commissions.
Yeah.
So basically, that if you could do even curb appeal for pictures, when you're looking at houses, if you look at this, it's huge. It's like, oh my God, I have to spend $20-30 grand on a roof today, because they're thinking in their head, the customer or the client or the future prospects, they're thinking in their head like, oh my God, I got to replace this roof. So that could potentially hurt the homeowner and hurt the realtor trying to sell the house.
Well, and when you're in the negotiation part after a home inspection on any real estate transaction, right, Larry, you end up in a situation where buyers are like, well, we're going to need $2,000, $3,000, $5,000 for the roof situation. In the meantime, Tom, what you're telling me is you might be able to fix that situation, depending on the house, for hundreds of dollars, not thousands.
Yeah, because there is no physical repair to the roof. It just needs to be cleaned.
Yeah, it just needs to be cleaned, because it's just algae, mold, and mildew, a lot of moths. We get a lot of calls from insurance companies or from customers that say, hey, we're going to drop your insurance if you don't get your roof cleaned. And that's the
Seriously?
Like the algae, if they see algae, we're also going to building a lot of with algae on the north end of the houses. If they don't get that off, their insurance is going to actually drop them. So we get a lot of customers.
Great point.
Insurance companies have started taking a drone photo of where your roof is today. Because there's and Tom, I apologize, we're getting off point from your business, but the thing is that they want that baseline in the file, so if you come in and say, hey, I need these repairs because a storm blew through, they're like, no, that's your deferred maintenance. It used to be they're paying for so many roofs, the insurance companies, because roofers are out there.
As soon as there's a storm, they're knocking on your door.
So but again, that's a whole nother thing. So Tom, that's fantastic information.
Most definitely, and we also, like even when it comes to roofs, we have a product that we actually rehydrate the roof shingles. So after we're done cleaning all that algae and killing it, all the mold, mildew, algae, we actually replenish the roof shingles. So that way, it gives another 5 to 10 years of life to that roof. So that way, the homeowner doesn't have to go through the insurance company. The insurance companies don't have to go through the roof. If the roof is in good shape, we rehydrate the roofs also.
Yeah.
So it's so much more value to it for what we do here at Chicagoland Softwash because, there's a need for it.
Yeah, a definite need for it. And guys, if you're thinking about selling, you should definitely look into this. Remember, the first thing someone sees when they pull up to your house is the exterior of your house. How does your roof look? Yeah. How does the siding look? How does the stone look? How does the brick look? And even, how do the sidewalks look leading up to your house? Paver, brick, whatever it is you have. I'm sure, Tom, that it works well on that as well.
It does. Again, the whole curb appeal, when you go into a car dealership, you're not going to buy a dirty car because they're not going to give you a dirty car. They're just going to give you a clean car. You know, and everyone deserves that. For a fraction of the cost, it's well worth the money to invest to, put more money in your pocket for the seller. And then the buyer also doesn't have to come in and do all this work.
Exactly.
It starts ending up.
Buyers do not like doing a lot of work when they purchase a house. They want to kind of purchase the house, and they want to kind of let the dog out in the yard, fire up the barbecue, and that's it. That's what they want to do.
Sure.
Hey, listen, before we let you go, how do people get in touch with you directly if they want to find out more about Chicagoland Softwash and how they can increase the value of their house before they put it on the market?
You can reach us at 224-413-2655. You can either call or text. Either way, if we don't answer our phone right away, it's because we're out working. But we will definitely return your phone calls. Or you can visit us at ChicagolandSoftwash.com.
Yeah, awesome. And guys, remember, super important that your curb appeal is a big, big deal. Tom, thanks for joining us. And you guys give Tom a call, Chicagoland Softwash. You can also reach them through TrustedAgentUSA.com just by going to our partners and clicking on their banner. Tom, thanks again for joining us, and we'll talk to you soon because you will be doing my house in the future. That I can tell you.
You definitely can't do because I love going out to Naperville to Schlotsky's Deli.
Nice.
All right, man. Have a great weekend.
Larry, Dylan, and family, thank you so much for the time.
All right, we'll talk to you soon.
You got it. Shout out to Schlotsky's Deli.
Absolutely.
Yeah, they're awesome. Thank you guys so much.
Okay, I'll see you. So, Dylan, we're going to take a quick break here, and we're going to come back and wrap up.
You got it.
Tune in to Real Estate Radio Saturdays at 9 a.m. hosted by the real estate therapist Larry Shakman, a top-producing real estate broker, author, CEO, and founder of TrustedAgentUSA.com. Top-performing agents for 2% commission, saving you thousands when you sell, buy, or invest. Real Estate Radio, the ultimate real estate radio experience. Get insider tips from experts throughout the real estate industry. Streaming live on Facebook at WCPT 820. Trusted Agent USA, Illinois, license number 475145795. Welcome back to Real Estate Radio, sponsored in part by TrustedAgentUSA.com, the ultimate real estate matchmaker, saving you thousands. Now back to Larry, the real estate therapist.
All right, guys, we are back to wrap up, but we have, something I want to talk to Dylan about, and Dylan's going to expound on a little bit regarding VA loans.
Yeah, well, VA loans specifically, but the concept applies across the board, Larry. One of the things that I mentioned earlier in the hour was that we've been involved in saves, where we've turned around and come in late, literally at this time of the month for end of month closings, and loans have been going sideways at other lenders. And one of the things that we've talked about is, in a market like this where things have become more stressful, I think that real estate professionals and lenders alike have cut corners in a stressful market. And that may be a cost-saving thing, but that also may be a get people to agree to yes thing as quickly as possible. And so one specific example is, when we qualify our veterans for loans, oftentimes we're competing for that business with call center lenders. And the fact of the matter is that call center lenders are just mortgage companies, right? But they'll advertise on golf tournaments on Sunday, on football games, college football on the weekends, and they'll wrap themselves in the flag, and they'll thank folks for their service, and they'll imply that they're affiliated with the military or the government agencies. And they're not. You're calling a call center where people, make $10 an hour, and they're moving people through in volume, and they do some really quick envelope math, and they're like, oh, again, here in 10 minutes is your pre-approval, and it's not strong. And then you get under contract, and then you're 2 weeks from closing. And particularly in the circumstance of the military veteran, they are not even eligible for the loan, but they haven't pulled the certificate of eligibility. Our pre-approval process, specifically, and any quality pre-approval process for our veterans, should include the finding of the certificate of eligibility before the pre-approval letter is issued. It's a hard stop. It's impossible if you don't have a certificate of eligibility, and it's unconscionable to find that out when you're under contract with 2 weeks to go. So sometimes we just find out that the answer is no and has always been no. But sometimes we can fix things. And one of the things that all the way at the other end of the spectrum, I work in an office building that has a title company in it. And so I got called down a couple weeks ago to a closing. And again, it's one of these call center shops, national company, and they're sitting there at the closing with a military veteran, a gentleman who served in the Army, and he had been there. It was 3 PM. He'd been there since 8 AM, and he had to bring about $895 to the closing table. They never verified his earnest money, which basically, not to bore you with the details of this, but if you write an earnest money check, we have to prove that you had that money in the bank. We need the bank statements. We have to show it clearing. We have to show the back of it after it's cleared or it's cleared out of your account. There's just documentation for the investors in the loan on the back end. It's seamless to you on the real estate side, but it's absolutely critical. They never did it. So he had zero money verified. He needed $895 to close the loan. He's like, well, I have $895, but at that point in the loan, it's not good enough. So the point is that loan was sent to the closing table with documents, wasn't clear to close, but they sent the documents anyway because they thought it was going to be okay as long as he didn't need any money. But as soon as he needed $1, it was a jam up. And so they spent 6 hours trying to fix a loan that should have been fixed weeks ago. So the point is, there are lots of places for things to go wrong. And if your loan is going sideways, especially if you're working in a transaction or you yourself, if you're listening, are a military veteran, and it's just feeling like it's not going right, you should get a second opinion from a local lender. We can do it. We're not the only local lender in the market that does quality work to serve our veterans. I mean, we're one of them, but we're not the only one. The thing is that it's critical to understand that portion of it and understand that again, your loan can be saved, but if it feels like it's not going right, that second opinion is important.
Yeah. Yeah, I think, guys, it's so important to work, just like find a good realtor, a good broker that you know, like, and trust to work with, or somebody that you've been referred to through a source that you trust. It's also important to work with a lender, mortgage broker that you know, like, and trust, like Dylan. I could sit here and vouch for the fact that Dylan does just amazing work, and
well, thank you.
You're going to have a great experience with him. Before we wrap up, again, I just want to thank our sponsors, At Home Title Services. If you're a real estate agent, you need to be a registered title agent as well. Check them out, athometitleservices.com. TrustedAgentUSA.com. If you want to save money, you may not want to. Not everybody needs to save money. If you want to save money on buying, selling, or investing, you need to check out TrustedAgentUSA.com. And, of course, Benchmark Mortgage, Dylan Kramer.
Benchmark Mortgage.
Thank you, sir.
You bet.
And
Awesome.
We will see you again next week. Everybody, have a great weekend, and we'll see you again next week, 9 o'clock. Real Estate Radio. Take care, everybody.
Thanks for joining.